Gone are the days when everyone needs cable to watch their favorite TV shows. Now, cord-cutting platforms are the newest trend. More people are using these platforms as it costs less than the traditional cable packages. Even physical album sales are in decline because in this new digital world, streaming is taking over. Fubo TV, one of these cord-cutting platforms, went public through IPO last October 8, 2020. Despite reporting positive quarterly results, Fubo TV stock is going down the drain with its stock price sitting at $7.30 at the time of recording this, representing a decrease of almost 386% from its all-time high of $35.50 per share. A stock price worth $7.30 a share may seem like a good investment for some people, considering one of the giant streaming platforms today, Netflix, is sitting at around $350 per share. But we strongly urge you to do your own research. We're not financial advisors, and this isn't financial advice. One of the only things that keep people watching TV is sport, and that's one of the problems that Fubo is tackling. Watch until the end of this video and see if Fubo TV could be your next investment. Shout out to one of our OGs here in our channel, Jimmy Jim, for requesting this video. We really appreciate your non-stop support of our channel. If you haven't already, follow us on our social media accounts at Wealth Gambit so you'll be updated with stock market news. Everyone seems to be losing their mind over gas prices nowadays, but have you seen these Fubo subscription prices? $65 a month can get you basic subscriptions for Netflix, Disney+, Apple TV+, Amazon Prime, and Hulu. But is Fubo worth the price? Well, that's up to the consumer. They offer over 100 channels, and this could make sense for people like bar owners that have multiple sports streaming. In this video, stay tuned and we'll talk about the Fubo company as a whole. Fubo TV began as a sports-focused streaming service in 2015. Now it has expanded to news and entertainment, adding channels such as ABC, Disney Channel, and FX. The streaming platform is available in the United States and US territories, Canada, Spain, and recently, France. The company is led by its co-founder and CEO, David Gandler, together with its co-founder and chief growth officer, Alberto Horajuela, its CFO John Janedis, Mike Berkeley as its chief product officer, and Gina DiGio Sheldon as its chief legal officer. In its Q4 earnings call, the company added more than 185,000 subscribers in the last quarter of 2021, bringing a total of more than 1.1 million subscribers to the platform.
Wow, so many things all at once.
For Q4 2021, the company recorded a total of $231 million in revenue, with $25.9 million coming from advertising revenue, which represents a 98% increase from their Q4 advertising revenue in 2020. The company reported a net loss amounting to negative $112 million and adjusted EBITDA amounting to negative $82.6 million in the fourth quarter of 2021. Fubo TV also reported that its subscribers streamed 404 million hours of content during Q4 2021, representing a 96% increase year over year. For the full year of 2021, the company delivered $638 million in total revenue.
We believe the ability to watch and wager within a single ecosystem is a feature that only Fubo TV has brought to market. In summary, I am very optimistic and confident. Going forward, given our exceptional execution this quarter, which closed out an outstanding year, we are undoubtedly well on our way to building a category-defining company with attractive unit economics. We delivered a record fourth quarter and full year across a number of key financial and operational metrics. We continue to benefit from our position at the intersection of three industry megatrends: the secular decline of traditional pay television, the shift of TV ad dollars to connected devices, and the rapid adoption of online sports wagering. I am more excited than ever about Fubo's future as we aim to transcend the industry's current TV model. 2021 was a pivotal year for Fubo. Our team executed on our business plan, and we have increased confidence in our long-term strategy. Looking ahead to 2022 and beyond, we expect losses to improve in our core domestic streaming business, led by continued share gains and operating leverage. Our high-margin advertising business is expected to scale with very strong double-digit growth, fueled by further improvements in subscribers, ARPU, and CPMs. And we will continue to lay the foundation for our wagering business, which we expect will become a major beneficiary of our flywheel and a contributor to our growth in 2023.
The company is expecting a revenue of $232 million to $237 million within North America for the first quarter of 2022, and full year revenue guidance of $1.08 billion to $1.09 billion. The company also expects its North American subscribers to reach 1.028 million to 1.033 million in the first quarter of 2022, and nearly 1.5 million for the full year. For its other subscribers, or what it calls rest of the world, ROW, the company expects $3 to $6 million in revenue for the first quarter of 2022 and full year 2022 revenue of 15 to 20 million. Moreover, they're expecting their rest of world subscribers to reach 235,000 to 240,000 in the first quarter of 2022 and 270,000 to 280,000 for the full year. Fubo TV's massive share price decline may have pushed some retail investors away. Fubo TV long holders out there doing their own due diligence must have been either chilling or taking advantage of its dip, especially when they knew these big institutional owners are holding Fubo TV stock along with them. The Vanguard Group, the largest issuer of mutual funds in the world, holds around 7.39% of Fubo TV shares, representing a total of 11,366,049 shares with a total value of $122,071,366. BlackRock Fund Advisors, Marshall Wace LLP, and Susquehanna Financial Group are also some of the big institutional investors that have the biggest position in Fubo TV. Fubo TV has recently partnered with Kantar, one of the world's leading data-driven analytic and brand consulting companies. According to their press release, their partnership will allow advertisers and marketers running campaigns on Fubo TV to better understand the effectiveness of their connected TV, CTV advertising and benchmark their performance against that of their competitor. Moreover, it will enable advertisers to prove the direct impact of CTV campaigns on brand outcomes, including brand awareness, brand favorability, consideration, and purchase preference. A recent campaign effectiveness study with the popular over-the-counter pharmaceutical brand was led by Fubo TV and Kantar. The study showed that media placements on Fubo TV helped drive consumer preference for the brand across the overall audience and led to a +9 lift in purchase preference, demonstrating the effectiveness and impact on brand outcomes, therefore attracting more advertisers and marketers to run campaign ads on the Fubo TV platform. Considering that more and more people are switching to cord-cutting platforms, Fubo TV could seem like a solid play for some investors, but we're personally staying out of this one to invest more into SoFi.
Nope, I'm out. I can't.
But just a disclaimer, we're not financial advisors and this isn't financial advice, so always do your own due diligence. As Warren Buffett would always say, risk comes from not knowing what you're doing. And if you're thinking of investing in Fubo TV, proceed with caution. That's it for today's video, guys. For all of our fellow Sophian soldiers out there, we made a SoFi investor group on Facebook. Make sure to join the group so you'll be updated on any SoFi related news. And that about wraps it up. Until next time, peace.